Welcome to today's Explainer. We are diving right into a really fascinating cornerstone of financial management inside JD Edwards Enterprise One, keeping those ledgers perfectly balanced. If you're managing multiple entities, you already know that cross-company transactions can get incredibly complex, incredibly fast. So let's unpack exactly how the system keeps this whole accounting ecosystem in check.
Here is our quick roadmap for today. 1. The unbalanced ledger problem. 2. 3 settlement methods. 3. Tracking through subledgers. And 4. Reconciling intercompany accounts. All right, let's just jump right in.
Starting off with Section 1, the unbalanced ledger problem, when companies transact internally.
So picture this scenario. What actually happens when companies within your broader organization transact internally? Say Company A pays a bill for Company B, or maybe they transfer some inventory. One gets a debit, the other gets a credit. But if you look at them in isolation, neither company's books actually balance. Left unmanaged, this is exactly the kind of thing that turns a routine month-end close into an absolute nightmare.
And that brings us to our ultimate goal here, 0. The foundational rule of accounting, as we all know, requires every single debit to have an exact matching credit, meaning the net balance of every single company in your system literally has to equal 0 for you to produce accurate financial statements.
So how do we fix it? Enter the system's hero, intercompany settlements. These are the specific balancing entries created to ensure each company's net balance hits that perfect 0 when those internal transactions occur. And the really cool part about JD Edwards here is the flexibility. You can either handle this manually, or you can configure the software to just automatically generate these vital balancing entries for you.
Moving right along to Section 2, 3 settlement methods, your tools for balancing.
When you're setting up these settlements, you basically have 3 distinct methods in your toolkit: the hub method, the detail method, and the configured hub method. Depending on your corporate structure and how you actually want to route those balancing entries, you'll pick one of these to drive your automated accounting.
Now, here is a massive system constraint you definitely need to watch out for. If you operate in a single currency environment, you've got free reign. You can use any of those 3 methods. But if your organization uses multiple currencies, the software puts its foot down. You absolutely must use either the detail method or the configured hub method. The standard hub method is totally off the table. Keep that limitation in mind as your company expands globally.
Okay, let's peel back the layers in Section 3, tracking through subledgers, under the hood of JD Edwards.
The real magic happens the moment you post transactions. Posting triggers your AAIs, or automatic accounting instructions. And interestingly enough, there are 2 specific AI items built just for intercompany settlements. They act like invisible instructions, telling the software exactly how to balance the books based on whichever method you chose.
If you read the official documentation, it states the system tracks settlements through subledgers. The subledger type is A. In practical, everyday terms, this just means each company involved gets an automatic offset sent to the correct intercompany account. JD Edwards cleanly organizes this whole process by relying on subledger type A, which simply stands for address book.
Expanding on that just a bit, the system uses that subledger field to actively record the other company involved in the transaction. So if Company 1 is doing business with Company 2, the subledger simply becomes the address book number of Company 2. It's a brilliantly simple design, but it makes one setup step absolutely mandatory. All of your companies must be properly set up in the JD Edwards Enterprise One address book system for this automated tracking to actually work.
Finally, let's wrap things up with Section 4, reconciling intercompany accounts, your maintenance safety net.
Look, it is absolutely amazing to have automated AIs doing the heavy lifting every single day, but the official documentation outlines a very clear best practice. You should manually reconcile your intercompany settlements on a periodic basis. You really have to treat this as your safety net. It's how you ensure no weird, complex transaction anomalies have slipped through the cracks and messed up that zero balance goal.
To actually run this safety check, JD Edwards gives you some highly specific tools. You need to run 2 exact integrity reports for a successful manual reconciliation. First, the company's imbalance report, and second, the intercompany accounts imbalance report. Running these periodically is going to flag any discrepancies instantly, so your accounting team can hunt down and resolve those issues way before period end close.
I want to leave you with a thought to chew on today. Take a hard look at your current software environment. If your organization scales to new currencies tomorrow, are your intercompany settlement methods currently configured to handle that shift without completely breaking your ledger? Remember that multi-currency rule we talked about?
Right now is the absolute best time to evaluate your configuration, double-check those address book setups, and make sure your AAIs are ready for whatever growth comes your way. Thanks so much for joining me for today's explainer, and we will catch you next time.